Hello. The topic I wanted to talk about here is, can you actually be an S corporation? In other words, do you meet the technical requirements of being able to make an S election for your business? This election was designed for small businesses, small business corporations. I shouldn't say small businesses, but small business corporations was the wording in the statute. However, when we use the term small business, it actually isn't about the amount of revenue or assets that the business has. You can be fairly large in size in terms of your volume of revenue or the assets that you have at your disposal. What they meant about a small business corporation is the type and number of shareholders of the business. So the first requirement, there's several requirements here that I'm going to go through, but the first requirement is the corporation must be a domestic corporation. So U.S. taxation extends to U.S. taxpayers who have foreign activity, and you may incorporate a foreign entity, but a foreign entity generally cannot be elected to be an S corporation. We're talking about a domestic entity that is elected to be an S corporation. So that would be either a corporation that actually incorporated under state law in the United States, or it could be actually an LLC that makes an election to be treated as a corporation under federal tax law. So either of those two would generally be what you're looking for as a domestic company eligible to elect S. The shareholders have to be allowable shareholders, and so there are some types of, well, generally speaking, let me go there. Generally speaking, we're talking about individuals. Certain types of trusts and estates can also be eligible shareholders. But what cannot be a shareholder of an S corporation is a partnership or another corporation or non-resident aliens. So when we say an individual would be the shareholder, it has to be a domestic person. It can't be a non-resident alien that is a shareholder, a foreign person. A third requirement is that you cannot have more than 100 shareholders. So that's a limit on the total number, and that can rear up as a problem occasionally when you have transfers of ownership, either because maybe somebody is passing on the family business to heirs, or there's a transition in ownership to employees or things of that nature. So that's 100 shareholders sounds like a lot, but it can be a hard stop for some companies as to whether they can actually be an S corporation or not. A fourth requirement, which is often talked about and is often an issue to look at with the eligibility of being an S corporation, is that the company can only have one class of stock. A fifth requirement is that you cannot be an ineligible corporation. So there are certain types of domestic corporations that cannot elect S. For most operating businesses, this isn't a concern. What we're talking about, these ineligible corporations, generally are certain types of financial institutions or insurance companies, or what is referred to as domestic sales companies. A domestic sales company is a technical tax term, so your operating business that makes sales probably doesn't fit in that category. So this probably isn't a problem for you if you're a regular operating business, unless you're kind of in the finance insurance space. Being a domestic corporation, as I mentioned earlier, means that you're either a true corporation formed under state law, or you happen to be an entity that can elect to be treated as a corporation under federal tax law. And that type of entity that can elect to be treated as a corporation under federal tax law is usually a limited liability company. So we see LLCs that ultimately elect to be S corporations. So what does one class of stock actually mean? I mentioned earlier that that's one of the key category or key requirements that often has legs to it, things that have to be analyzed or dealt with in your S corporation. And what that requirement means is that there's that every share of stock has the same rights to distribution and liquidation. That definition of one class of stock is about economic rights. It's not about voting rights. To elect S, the corporation generally can't have preferred stock, as preferred stock is defined under most state laws, because preferred stock will usually have a liquidation preference under state law, and that means that not all shares have the same rights to liquidation and distribution. Okay, well that's it for this video. I'm doing a series on a bunch of S corporation topics, so stay tuned for more. Have a great rest of the day. I'm going to get back to the garden.